What if I told you that your decision to watch this video will either cost you up to $12,000 or put an extra $12,000 in your pocket? You're probably pretty skeptical, and I would be too, but if you hate tax time and putting your taxes together as an entrepreneur, small business owner, or freelancer, I promise you that you are going to get massive value out of the tips and tricks that I'm going to share with you in this video. I'm Megan Marsh, co-owner of Keystone Alliance Mortgage and co-host of the CoLab podcast, where I love to share all the experiences, all the tips and tricks that I've learned throughout the years to help you grow your business, put more money in your pocket, and just get more freedom in your life. And so every time tax time comes around, we always file our extensions, and I'm scrambling that last week of the year to get our accountant all the things that they need to finish filing. And I have promised myself for years that it was going to be the end. We were going to get everything in order, that everything was going to get organized, and this year was the year. And so I wanted to share with you a few of the things that we did that helped put more money in my family's pocket, and some of the things that helped make more freedom in my life so I didn't have to chase documents and know what to do. And if you're anything like me in my business, you are your business. When you go to the grocery store, I noticed that the office needs a jar of mayonnaise, or we ran out of toilet paper, so you grab it and you just put it in with your groceries. Or maybe you're like my husband, who owns his own business, and when he's grabbing a pizza for the family, he grabs 5 other pies to deliver to clients or people that we've worked with. And maybe it's a box of donuts. It could be a number of things, but you are your business. But you're also creating a complete and total accounting and financial nightmare that's costing you money. So I'd like to go through my 5 tips that helped us get everything in order and put more money in our pocket. So tip number 1 for anyone who owns a business and wants to start putting more money in their pocket and paying less to Uncle Sam. Number 1 is to get organized and have a system for how you save and where you store all of your documents. I'm going to be completely honest with you. I have gone through probably 4 or 5 different people, assistants, part-time help, trying to help get me organized with all of our bank statements, credit card statements, copies of checks, interest statements, all those things that you get together to give to your accountant. And I never could get any of them to put it in the same place or name it the right way. And it literally was creating such anxiety on my part. And so I finally sat down one weekend and made out this little chart. And what I did was I had what's called a naming convention. It has made a world of difference because at any given point, no matter if my assistant is downloading a statement, a check, an invoice, I know exactly where it is. And so for those of you who own a business and run a business, or you're starting a business, if I could have done this when I got started, that would be my first tip, is to take the hour or 2 hours to come up with a system, what your folders are called, how you want things labeled, because it will make for such easier, it'll save so much time when you're going to give your accountant all that information that they need to prepare your taxes and tell you how much you owe to the IRS and to your state when tax time comes. Tip number 2 is to keep good books. Now, any of us who have, let's say, businesses, the one I'm in right now, we have employees, we have a lot of stuff going on. You're most likely you have a system for bookkeeping. A lot of times, if you're new to starting your business, or if you're a business that usually it's just you, maybe you're a real estate agent or you are a freelancer, you might not have a system that you use for your accounting. And that is a huge mistake. I look at tax returns day in and day out, and one of the biggest mistakes that I see is not actually having a system to record everything, okay? And there's some really easy ones out there, and I'll put some links down in the description for you. You don't have to use QuickBooks. QuickBooks is what a lot of businesses use. You can use Mint. There's apps now. There's one that's called Personal Capital. And what it does is it starts putting all of your expenses, it automatically links it, and you just need to go in and click and say what that check was. Because then all you need to do when it's time to turn all that information is, you just go to the category and it just summarizes it for you. So if you're not sure what to use, go to the description, and I will put a link in for 2 resources that anyone can use, and just start getting it organized and using a system. Tip number 3, don't rely on your accountant or CPA to reduce your taxes or know what your write-offs are. So I'm just going to share with you a quick little story here. I was looking at a tax return for a real estate agent, and I noticed that this real estate agent had very few write-offs, and they were over-reporting income. And so I asked this person, and the person I was talking to said, well, I didn't know I needed to give them that. And I know, because I'm very close with the accountant that we work with, I asked my accountant and said, hey, does X, Y, and Z, what kind of write-offs do they have? Do they have this? And my accountant said, I keep asking them do you have any more write-offs? Do you have any more expenses? And no one's being specific enough. And so it is so important for you to be proactive in understanding what all the write-offs that you already have and the ones you could have and could add to your tax returns. And so the last tip here within this is, I just finished my taxes and went and paid the IRS and paid the amount. And the next day, after I went and paid the $20,000 that was due, I went and opened up my tax return, and I started going through, and all of a sudden on one of my schedules, I noticed that there was something missing. And then there was another line that was missing. And it was my fault, because it was 2 of the pieces that we handed in at the last minute. But because of me handing it in late and the accountant missing me putting on my summary sheet, she missed $25,000 in expenses that should have gone on there. That's close to $7,000 I paid that I did not need to. Now, we will be able to go and fix it, but that's the point of this tip, is to not rely on someone else and to know the things and be able to understand your tax return and where your expenses go. I know it seems overwhelming, but I promise you there are easy ways to look at things and identify your expenses. And I do have, and I'll put a link down in the description, I have a little Excel template that I use that I've created over the years that makes preparing tax returns for your accountant very simple. And I'm going to put it down there so that you can grab a copy, answer the questions, and then hand this worksheet off to your accountant, and hopefully then start getting some of these extra expenses and write-offs on your tax return. And then number 4 is having a separation. So this is another thing, and I'm going to keep using my example of a real estate agent who receives 1099 income, and you are your own business. So a lot of people who are 1099 or you're a freelancer, you have your bank account, right? And that's where I want to test you here to start really separating your bank accounts. It will go so far in also helping you organize everything. So let's say that you are a real estate agent. Let's say you own 1 investment property and you sell real estate. What types of bank accounts should you have that would help make writing off your expenses easier at the end of the year? So if you are that real estate agent, you're going to want to have, you can keep that personal bank account that you have. Then you're going to want to set up a business bank account, a business checking account. And it would say, Sally Sue Realtor business checking, okay? Number 3, you're going to want to have another separate account for I call it the tax account. And it's money that is not yours to spend. It's just sitting there until you need to pay it. And then the 4th account would be for your rental real estate. You don't want to deposit everything, all these different things, into one bank account. It makes for a very confusing period when you're preparing your taxes. But not only that, for anybody who's listening to this, if you own your own business, if you're self-employed, you probably have experienced the whole situation where you go to qualify for something and someone looks at you and says, you don't make enough money, your debt to income ratio is off. And I see that a lot because part of it is there's one bank account and everything's going in there. Well, those 4 bank accounts I was telling you about, if you keep a personal account and you have a business bank account, and every check you get from when you sell a house, you deposit it into that business bank account first, and then transfer whatever's left over into your personal account. If you pay, for example, your car, let's just say it's a car. If you pay your car out of that business bank account, even though your car loan's on your personal name, when you go to get a loan and you can show proof that your business paid for that car, it doesn't count against you when you're qualifying. So not only does this separation help you with organizing, but it's also going to help you exclude different debts that you have that really are for your business. Number 5, to kind of round all these things out, is to educate yourself and plan ahead. And you're already doing a great job if you've made it this far in the video and you're learning some new things. Well, this is where I'm going to show you about that $12,000 that I was talking about at the beginning of the video. With all the tax returns that I look at, there's a couple different write-offs that a lot of people miss. If you have never heard of some of these write-offs, you're going to be in for a big surprise and a big treat when you prepare your next tax return. So the types of write-offs that you want to be proactive about and educate yourself. The first one is a home office. If you work 50% of the time or more, if you have a home office, you can write off parts of your utilities. You can write off your parts of the repairs and maintenance on your home. And it adds up. I mean, DirecTV, Netflix, your internet, your cable, your gas, your sewer, your electric, it adds up. And how they calculate that is, let's say your total utility bills are $10,000 and you have a house or apartment. You don't have to own your house. You have an apartment that's 1,000 square feet and your office that you work in is 300 square feet. 30% of those utility bills you can write off, but you have to give them then to your accountant, or you have to at least summarize those costs. So $3,000 being written off is going to give you about $1,000 less on your tax bill. So for those of you who are sole proprietors, freelancers, you file a Schedule C. That's the easiest way to do this. If you have children, you can pay your children. It used to be up to $5,000 and $6,000. Well, with the most recent tax breaks that they just released, it's gone up to close to $12,000, I want to say. And you can pay your children to do work for your business. That could be stuffing envelopes, it could be cleaning, it could be social media, it could be anything. You can pay your children. And when you pay your children, you get to write it off. They are not taxed. So they're not going to pay the taxes that everyone else would pay, and you don't have to pay that matching tax. So you're saving yourself money there. So I use the example, my oldest is 12 years old, and we're going to pay her about $4,000 to do some of these little tasks that she can do. That $4,000 is going to save us $1,300 on our tax bill. And then this money is all tax-free that she can use. She can put it into a Roth IRA. She can use it for her, dance classes. But a lot of you probably don't know about this, and it's a great way to reduce your liability and help your kids. And then the last one that has one of the biggest impacts is your vehicle. And I'm sure you're all like, yeah, I know, you can write off your mileage or you write off this. It's a comparison. You're right. But there is one extra little thing that a lot of people don't know about. And after you finish this video, and actually I will put a link down in the description so you can see a list of what's called Section 179 vehicles. There are certain types of, and it's not just vehicles, it's other equipment, it's other things, but for most of us with businesses, you can actually, in a year that you buy a vehicle, it can be used, it does not have to be new, but it has to be on the list, and it's based on the weight of the vehicle. A lot of them are like mini SUVs or bigger cars that meet the weight limit. The year that you purchase that vehicle, you can write off the entire vehicle. So for example, this is where I talked about planning ahead. I knew last year in 2019 that I needed a lot of write-offs. And I had at the time a Suburban. I loved it. It's a great car. Nothing wrong with it. A couple years old, but I knew I needed write-offs. So I brought my Suburban in and I grabbed I'm going to get this wrong. I never forget my cars, but I think it's an S8. It's an Audi. It's on the list. It was used. It was beautiful. $39,000. You could do the same thing with a used vehicle. Let's say you find one for $30,000 that's on the list. If your income is $100,000 and that's your only write-off, instead of being taxed at $100,000, you get taxed at $70,000. That one trick alone will save you just under $10,000 on your tax returns. And so you want to plan ahead so you can use these deductions and buy vehicles according to, you can do this every few years. The next years, you can still write off some of the things that are done with your vehicle. You can still write off certain things that have to do with that car. So plan ahead and learn what write-offs that you aren't using that you could have, and go back and look at your tax returns to see maybe what expenses you didn't know about, and ask them to amend your return so that you get a credit back for taxes that you've already paid. It's one of the best parts about being your own boss, owning your own business, is being able to write things down so that you don't have to pay as much to Uncle Sam. And make sure that if you found value in this video, share it with someone else who's self-employed and who needs to know about these deductions. Hit subscribe and hit the bell so you get notifications. We're going to continue to share the tips and tricks that we've learned through the years of building our business, because that's how we all learn, is through each other and by other people. I'd love to hear the tips and tricks that you've used in your business to help save money, get organized, and reduce your tax bill. So I would love to see in the comments if anyone else has a write-off or a tip that you had. I'd love to share it on one of the next videos. You can also check out our podcast by going to our website, which is thecolablife.com.